What's up, everyone? Excited to give this video today about Tesla. So it's been no secret that Tesla has dominated the supercharger space for EVs, and we've seen a slew of companies kind of jump on the bandwagon here with Ford, GM, and Rivian all adopting their superchargers. So good to see that, these other EV players are simply throwing in the towel in terms of the charging space and are letting Tesla kind of lead things there. So that is good to see. And in terms of what I'll cover for this video, I'm going to go over the chart and give a price prediction. I'm going to go over a recent article on the stock, which has a bunch of great information. Then I will jump into the fundamentals of the company. So with that being said, this is not financial advice, just my own opinion. So let's jump into it. As we take a peek at the chart here, you can see that shares are coming up to resistance at about $260. So this is where shares had topped out back in June of 2022. It's also where shares had bottomed in September and July of 2022. And we've seen over the past 2 days the stock reject this level. So this definitely seems like a firm level of resistance for shares. So I will personally be waiting on my Tesla calls until we get over this level. But I do think this little pullback we've gotten in the past couple days is a healthy pullback within a larger bullish uptrend. So like to see that there. And we have really, really great momentum for shares. So we're above all daily moving averages, and all daily moving averages are swinging higher as well. And the most important thing is that we got the 50-day moving average crossing above the 200-day moving average, which is a sign of bullish momentum and is known as a golden cross. And this is pretty much the most widely watched and followed daily moving average signal in the market. So great to see that there. And then we've also seen overbought conditions, according to RSI, subside. So, bullish momentum, RSI looking good. We're coming up to this major resistance level. As long as we break that, I do believe we will get a move higher. So in terms of my trading plan for Tesla, I'll be doing one of the two things. I'll be waiting for either or. So if we move above this 260 level, I likely believe we move higher. And then in terms of the next major resistance level, well, you could see we almost have a triple top here at about 315, which is where shares had topped out last year in the fall. So if we come up to this level again, we might face some resistance. So I personally will be playing that move as long as we get a move above 260 to basically 260 to 315, which is where shares had topped out in the past. And I will show you that here if I can get this line straight. But yeah, I mean, Tesla overall looks good on the chart. Really just think this 315 level is a firm level of resistance to be on the watch for once we get above this $260 resistance level. So with that being said, I'll jump into the other scenario where I will buy some calls or shares is if we get a move down to the moving averages, which coincide with support at about about $205. So if we get a move down to this support level, which is where shares had topped out in March, also in February, and it's where shares had bottomed in October and May. So you're seeing significant consolidation around that level. So likely if we come down to $200 I think we likely hold that level and move higher on the backs of bullish momentum. So that would be basically the two scenarios in which I will jump in head first to some Tesla calls or shares, with the goal of making some short-term profits. And then when we take a look at the seasonality trends, so we can see that June on average is the best month for Tesla. On average, the stock rises 20% in June. So good to see that there. And then we have August and July, these 2 months as the third and fourth best month for Tesla historically. Over the obviously those 2 months are the upcoming next 2 months. Therefore, we're coming down, or we should break through this 260 level. If we do, I think that will coincide very well with this bullish seasonality trend, which should help push shares higher. So, I mean, this just, like I said, gives me the average return by each month for the past 12 years of Tesla's pricing history, which obviously is the entire history of the stock. And as you can see, there isn't an average month with a decline for shares, which kind of tells you all you need to know about share price performance over the past couple months. So very good to see that there. I'm bullish on shares, and I likely think that the technical setup likely leads to some upside as long as we get a move over that 260 level. If not, I'll be waiting till we come down to that $200 support level. With that being said, let's take a look at some fundamentals of the company. So Tesla has been, well, we've seen, first off, we've seen a massive rise in AI hype, right? Well, Tesla actually has some AI correlation that isn't just hype, it's reality. So pretty awesome to see that, and I'll kind of dive into that in a bit. So ARK Invest Kathy Wood called Tesla the biggest AI play around, and that's someone who is invested in all the other small AI stocks, right? The fund manager cited Tesla's immense potential in the driverless taxi arena, adding that the auto giant could see a massive run up in its stock price to around $2,000 in the coming years. Wood also predicted that autonomous driving platform will deliver 10 trillion in revenues from almost zero by 2038 globally. Tesla has an extensive AI and robotics program, including projects like Tesla Bot, FSD chips, Dozo chips, and much more. Therefore, it's likely challenging to value Tesla like a traditional automaker, providing that the company has enormous potential in the driverless taxi business, robotics, and AI. Obviously, everyone saw that, kind of futuristic / scary looking robot that they put out, which was pretty cool. So this company is way more than just an automaker. And Tesla remains abnormally profitable for an auto company. The tremendous sales growth and profitability growth potential as we advance. So Tesla generated a gross profit margin of 23% in the last quarter, a decline from the 27% gross profit margin the company saw in the quarter last year. So, 23% gross profit margins, pretty solid, especially for an automaker. In the recent round of price cuts, Tesla brought the price of its mainstream Model 3 vehicle below $30,000. Americans can now save $2,000 on a standard Model 3 vehicle or receive $3,000 in savings when purchasing a Model Y. So they're bringing down those costs, making it more accessible for the average American to own an EV, right? When you take a look at Ford and the other EV companies, the price points are just 40, 50K, 60K. It's crazy. So like it's good to see that Tesla is lowering its prices, and the used car market for Tesla as well is pretty low, because they have so many new cars being added every day. And companies like Lucid, Rivian, and Neo and others are finding out how complex the car game is. In addition to mass production, newer EV startups recognize the difficulty of dealing with a slower than expected economy and the challenges of competing with Tesla in an ultra competitive EV space. So a lot of these players are just starting to develop their production facilities. Tesla has many production facilities all across the world, which makes them, the leader and well positioned to, supply this demand that we've really been seeing for EVs over the past couple of years, right? I mean, over the past couple of years, EVs have kind of switched to a luxury item, and I think that trend is, just starting. And then when we take a peek at profitability metrics, so You can see that gross profit margins have been, steadily increasing since 2019, where when at the lows in 2019, it was about 15% in terms of gross profit margin, and now we're right at about 23%, which is a good sign. You love to see that profit margins are continuing to become more and more healthy. And then we've also seen revenues look like, kind of an upward banana here, in terms of the chart. And then we've seen gross profits as well look very good. So awesome to see that there. And I do believe that continues to rise as, the company continues to, build more facilities, figure more things out. So definitely like to see that there. And then when we talk about this 23% gross profit margin, it ranks out really, really good when you compare it to other EV makers. So GM is at 13%, Ford at 15, Toyota at 15, Volkswagen 19, Honda 20. So Tesla is above all these peers, and they're really, like I said, they're investing in so much other growth areas than these peers, right? These guys aren't in AI, right? So it's pretty interesting to see that the company is investing so heavily in growth, but still has gross profit margins well above the peers. So awesome to see that. And then when we take a look at kind of the longer term price prediction for shares, so we can see that as long as revenue continues to grow, revenue and EPS continues to grow with what analysts are expecting, you could expect the stock to rise significantly as long as that PE remains basically constant. So if everything, kind of turns out correct and the growth, you know, expectations are right, well, and we maintain that PE, we could see a $350 Tesla share in 2024, and then you can just see like how that kind of progresses over time. In 2020, in 2030, you can see a $1,200 share price, and that's with a 27 times PE. And if this company does everything that I think it can do, I think it may be able to garner a way higher PE. It could be, 30, 35, or maybe 40, 50 if they continue to make strides in the AI space, and really find and dive into new growth areas, which the company has really been known for. So awesome to see that there. And then let's take a look at the financials. Let's take a look at all these numbers, see how they grade out relative to peers. So this is Seeking Alpha here. They put valuation, growth, profitability, revisions, all relative to peers. So in terms of valuation, Seeking Alpha is giving the stock a F, which isn't shocking, right? Because, they're basically comparing it to the auto space, which really should never have the valuation that Tesla does, because Tesla has so much more growth potential. So it's not shocking to see that Tesla sits at 66 times PE with a sector median of 12 times. I don't think that's super shocking at all. Obviously well above the peers. And that PE is actually expected to grow to 73 times compared to the sector median of 14. So, also price to book ratio is 16, which is honestly super high. That basically means that the market cap is 16 times the assets on its balance sheet. So that would be like their inventory, their property, their equipment. So that's expected to come down though, which I do like to see. So good to see all this. Obviously the valuation numbers don't look great, but when we take a peek at growth, we'll understand why. So anytime you have a company with extremely high valuations, you always want to see growth be high as well to rationalize, that high multiple that investors are paying, and we're seeing it here with Tesla. So revenue growth year over year is 38%, well above the sector median at 8%. And revenue growth for the next 12 months is projected to be 24%. Yes, it's a decline, but it's also declining at a similar rate to the peers, with the sector median at 6.7 compared to the 8.8 sector median for the last 12 months. This forward just means for the next 12 months. So good to see that there. And then operating cash flow for the next 12 months is projected to be at 21%, which would be a good change from the year-over-year decline of 4%. So definitely would like to see that there. And then in terms of EPS growth, we see that at 38%, which when you look at the peers is about flat. So definitely outperforming the peers in terms of earnings growth. So love to see that there. We're definitely seeing growth rationalize that high valuation, which is 100% necessary for a growth stock, right? And then when we take a look at the profitability metrics, we talked about the gross profit margin. And for those that don't know, gross profit is revenue minus cost of goods sold. So, you know, I think this sector median is probably pulling from consumer discretionary, which is why it's a little bit off here, which is why it shows as a D. But really, 23% in terms of gross profit margin is solid for the auto space. And then in terms of cash per share, we have $5 in cash per share, which definitely gives the company a good amount of leeway and backing for future endeavors. So like to see that there. And then net income margin is 13%, which is well above the sector median of 4.2%. So awesome to see there. And then leverage free cash flow margin is 2.8% compared to the sector median of 3.6%. But in general, profitability margins, profitability in general looks very good and grades out well compared to peers. And as you can see here, we're at Seeking Alpha gives profitability an A+ grade for Tesla compared to peers, growth with an A-, and valuation, like I said, with an F. But let's take a look at some analyst revisions to see what Wall Street is thinking about the stock. So this screen shows me the change in EPS expectations for EPS, like I said, and also revenue. So for EPS, we see that there are 26 different analysts that have brought EPS down, and we see 24 different analysts that have brought revenue expectations down. And basically the entire reason an analyst would bring expectations lower is, well, really a couple things. One would be company specific news. The second could be general market news. More it could also be news on the consumer. So it's not always Tesla's fault or for these expectations to come down. It really just says more about the broader auto space. So it is worth noting that analysts have over the past 3 months have been coming more and more bearish on Tesla, which I don't love to see, but honestly, it doesn't turn me off from the stock from a long-term perspective, given all the growth, that this company has. So to kind of sum it up here, Tesla is dominating the EV charging space. We've seen multiple automakers kind of throw in the towel. We're coming up to major resistance at 260. I believe this level is likely broken and we get a move higher. If it's not, then I will wait till about $200. And then obviously we have bullish seasonality trends. All that AI hype which is actually real hype for Tesla. Valuation doesn't look great, but we have growth metrics and profitability metrics rationalizing all that. So when you add it up, I think Tesla is a very, very good long-term investment for investors. So with that being said, I hope you enjoyed the video. I will end it there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck, everyone. Happy trading, happy investing.